Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you as we delve deep into the workings of the financial markets over the last week and look to the week ahead as well. Before we do that, it's very important we talk about the disclaimer, which says that everything we're going to discuss tonight is information, it's general, hasn't taken into account personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it very carefully and consider your objectives, financial situation and needs. Take it all into account or seek the help of a financial professional to determine that for you. It's also important to remember that markets go up, markets go down. You could lose money. Trading and investing is risky. You will incur losses at some time. Ultimately, it's you and not I who's responsible for everything that you choose to do. Other than that, it's a pretty simple format tonight. You get to ask me about any of the stocks you're interested in. And look, I know sometimes I'm a little bit of a taskmaster, aren't I, over the stocks that are meeting one of my three criteria. But look, ask away. We'll have a look at the ones that don't, and I'll still give you my opinion. You just might not like my opinion. Otherwise, it could be anything to do with the three M's of trading. That is the methodology, money management, and mindset. Okay, let's have some fun with it tonight. We can go anywhere you want to go. Let's go to, first of all, let's go to the AMI broker screen. And on screen, we have Turaco Gold, which is one of my shortlisted shortlist today. So seeing it's on screen, why don't we start here? We don't normally do that. We'll do the whip around the grounds and the portfolio management in a couple of minutes. But this was the shortlist of the shortlist for the ASX based upon today's candle. Alpa HPA, I remember somebody asked me about this last week. I think I said I needed a dink. And the important thing about a dink, and the dink usually is coming into play when we've got a turnaround set up. That's not an arrow. Let's try that one again. Let's go here, and there we go. So turnaround setup is where the long-term trend ribbon isn't green yet. Okay, but we do have a short-term uptrend. We've got some nice price action in terms of rising peaks and rising troughs. We've got a predominance of white candles again. So tick, 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 tick. And ideally what I like to see when this occurs is one little pullback, and we refer to that as a dink. And it's a little dink in the trend. And the reason why I want that to occur is obviously I can see demand side control is returning. Demand side is, we've got excess demand here. The demand side is in control of the price. I want to see how the supply side responds to that, and then how the demand side responds to that supply. So if we are seeing, for example, this is not a great example, but if we see a bunch of supply come in, okay, how does the demand side respond? Well, actually, this is a pretty good example. The demand side responded very well. I was going to say maybe it's not a great example because there was quite a bit of supply there, wasn't there? There was quite a bit of supply, but then it was more than equated for by quite a bit of demand. And it also came in here at the two trend ribbons, offering dynamic demand as well. Okay, so the little dink we end up having was sort of in there and in there. That's a little pullback. And then after that, I'm pretty sure, in fact, I'm quite sure that I put it in as a feature chart, I reckon, on that candle there. And therefore, it's also back in today. It was a big white candle, big volume yesterday, not as much today, but it's all still part and parcel, I believe, of the same move. So that's why that is in today. Turnaround setup number one for A4N. ARB is just a continuation setup. So we're seeing this is really the first of my setups, isn't it? Turnaround is the second, but this is pretty simple. Double greens, lots of white candles. Price action's pretty good. Can't complain about that one. It really is any high close, any candle with a high close warrants another third. So I expect you're probably already on it, but you're adding a third if you are on it, and your initial third perhaps if you're not. This is quite interesting. I did think a little bit about this one and whether that last candle was sufficient, but I do like the lower shadow, and there's really no difference between a long lower shadow and a full white candle. If that was a full white candle, I'd go for it. The volume, you can see some great volume over the last several sessions, and it's a decent pickup on that last one. So a bit of supply removal, early supply, that's what the shadow is telling us, and then strong demand coming at the ends. And I think that actually looks pretty good. I think that's the dink. That's kind of the intraday dink, and over a few days building up to the dink, if you get what I mean, for this move here, pullback, testing, holding pretty well. So I think that's quite an interesting one. But it is actually a continuation one because it's still double green. Then we go to the gold ETF. That's my preferred one. They all come up at the same time in my scans, and that's the one I choose to put in. And that's very, very straightforward here. That is just a continuation setup. This one's a little bit more of a turnaround setup, isn't it? You can see the long-term trend ribbon actually hasn't officially switched back to uptrend just yet, but a long sideways basing pattern, and I can't go past that candle. I love that last candle, big white candle. And how do you know if something's big? Because I guess a big candle here isn't necessarily a big candle the next thing. Well, we're looking at the candles in the recent past. You go, 1 month is probably enough, 21 periods, and saying, well, how does it compare to those? In order of magnitude, that last candle is probably 3 times bigger, and I think that's significant enough for me. MAF, I just think looks really good again. Another turnaround play, funnily enough, and those last 3 candles quite assertive from the demand side, and that last one is very, very good as well. And just bouncing off that short-term trend ribbon, which is now dynamic. Demand, that one's it can't get any more straightforward. On that one, it's been featured almost on a daily basis, isn't it? McMahon Holdings. This one, did I put it in on Friday? I can't remember if I put it in Friday. Obviously, it had the big white candle. A bit like big white candles, a sucker for big white candles on a big volume, especially in the turnaround play there. This is a turnaround. It's also somewhat aggressive in that we did have the big basing pattern, the influx of volume, the white candles, and the price action coming in. So a little bit of a hybrid, perhaps. But that Friday was the candle to buy. Do you buy it after today's move? Look, I still think you have some skin in the game here. If you don't, and obviously if you did buy it this morning based upon Friday's candle, then you are still holding onto that, and you can add some more. Where is that going tomorrow? I wouldn't have a clue. It could be $1, it could be 30 cents, but that's not what the point is. The point is it's a big white candle in volume. There's plenty of excess demand there, and if you struggle to buy those things because just a few days ago it was under 10 cents and now 70 cents, just just put a little bit less on it if that's you. If you don't, then it's a plus 1/3. This one is just the ultimate continuation. I've had it in so many times, and hopefully people are on it. It hasn't given you a reason to be out of it, and I think this really epitomises my technical model. We add to great trades, and you might have 5 or 6. Maybe you've had this experience, 5 or 6 that don't go all that well, 3 that were, maybe 2 or 3 that were awful, another 3 that didn't do a whole lot, but you're hoping you're getting that 3 or 4 of them that do something like this, where you just add and add and add, and it just keeps going big and big and big. And those trades really can make your year, and UX definitely fits into that category. Hopefully a few people have been writing this one. It's been in my scan list on a daily basis. So is this one, actually, to be fair, Arabanda. It hasn't really given you too many reasons like NUX not to own it. That's another continuation. So is this one, actually. This has been very frequently appearing in my scan list, and a little bit of a broken record. So is this one, and they're all nice white candles at the end, high closes. Many of them have decent volume and just a great continuation. So this one's been in a few times. Turaco Gold, we started talking about that at the beginning, and then Calix also, one which hasn't been in for a little while, because you can see it's been going sideways, but then appeared. I put it in on Friday, and it is actually closing above $20, I reckon, for I was going to say first time, not quite the first time, but not far off it there. In terms of the shorts, if you're looking to get some balance in your portfolio, and when we do talk about the portfolio management model, whilst the Australian market is still very much skewed to the long side, in the US we are able to have a little bit more of short exposure. But in Australia, for what it's worth, I think these still look very good for shorting. A2 Milk Company, what a great turnaround. And if our philosophy is to buy big up moves after earnings, okay, big white candles on volume after earnings, then we should also be looking to sell big black candles on volume after earnings. I say, well, Carl, that's not actually a black candle. I put to you, it is a black candle, because you need to consider the big gap here, and the gap is really part of the candle for me. I know it's not there, it's not visible. Probably one day I'll get around to actually maybe designing my own candle system that actually takes that into account. It really should. But that is a big black candle. I know there's a lower shadow there, but the philosophy is still the same. If we are buying big white candles after earnings, then we should be selling those. And you can see once the rally died, and look where it died as well, at the dynamic supply of the long-term trend ribbon, then it was down here when there's some dynamic supply from the short-term trend ribbon there, all black candles. It's the opposite of the longs we were talking about. So I think that one looks really interesting. So is that one that's a bit of continuation pattern there. This one's more of a turnaround, but doing all the same things. We're seeing it failing at the dynamic supply, the long-term trend ribbon coming down again. This one is more of a continuation now than it was a little while ago as a turnaround because the long-term trend ribbon is red and that looks quite bearish. Lifestyle Communities, another great example of selling those big black candles after news announcements. There's one there, there's one there. And I put to you, ladies and gentlemen, it's a little bit of the opposite to maybe what you might have done in the past. Hey, if it's not you, I apologise. But maybe there was a time where you thought that, oh, something has dropped a lot on an announcement, therefore it must be cheap. And I'll buy it here because it's a lot cheaper than what it was before. And it should bounce, bounce a little bit, even though it might get out on a little bounce. But what a great opportunity this is to buy quality on sale. I hope that's not you anymore, and I hope this one really proves to you why that shouldn't be the case. And there's certainly one there as well. Novonix is just a perennial underperformer, so is Patriot. These have all been in my short scan list day after day after day after day, but finishing with Weebit Nano. So that is the uptrend and downtrend scan list for the candle ending 23rd of September. Let us do what we're supposed to do at the start of these presentations. Head over to portfolio management. I could remember last week I drew in this window, and I stuffed that up because this is the one I make all my charts for market index and LiveWire. I should have been drawing in this window. So let me go here. And the Nasdaq is looking pretty good, and it was looking better after last week. I mean, this was a Friday candle, so that's what we had to look at a couple of Mondays ago. And then I reckon that one there, we looked at that one last week and we said something along the lines of, well, look, we were 50-50 last week. Let's not jump the gun and bolt towards a 2/3 or a full risk position at this stage. Look, just see how you go around 50-50. I don't think you need to be far off it, to be honest. If you want to start moving towards a 2/3 risk position, then go for it. I do warn you, however, that I reckon it was that day there when again we got a bit dudded by the timing. We were moving towards 2/3 or something that day that came down. But look, we're just off a full risk position, but we're certainly skewing towards the long side. I think I said within the risk you do have in the USA, we're sort of 2/3 to the long side as a minimum, 1/3 to shorts, and probably moving even more so towards the longs. It is, I think, still a good idea to have some short exposure out there if you can find it as an insurance policy. That's the Russell, that's the broader market. That's not fair, the Nasdaq is broader than this, but this is the smaller cap market, and it's a far more egalitarian market in that the bigger stocks here don't have as much of an impact as the bigger stocks in the Nasdaq do. So I think this is a better representation, it's probably the way to put it, of the US stock market. And that's very strong there. I don't think that's dissuading me from 50-50 moving towards 2/3 at this stage. Let us go around the world. We're going to have a look at the CAC, which doesn't look great, to be honest. That looks like it's changing trend to me, so that's a bit concerning. But the DAX is fine. Not a great candle yesterday. We don't like to see this white-black pattern. That's usually a pretty nasty pattern, but we will defer to the overall trend for now. The FTSE, again, a pretty soggy candle on Friday. And Spain just keeps shooting the lights out. We've actually got an offline request, not for a Spanish stock, but for a FTSE stock. We'll look at that in a second. Heading to Asia, we've actually seen a rally, and I think this rally, to me anyway, it felt like it centred around that US interest rate cut, that oversized, shall we say, 50 basis point cut last week from the Fed. I think many market participants were thinking 25, but in hindsight, we're all going, well, they're going hard, they're going early, they want to get it done quickly, and then probably sit on their hands for a little while and see how that goes. So I think generally it was a positive for markets. The other thing that was important, I wrote an article about a market index, you can go check that out, was how much Federal Reserve Chairman Jerome Powell pushed back against this notion that the US economy is weak, and he really talked it up. You've got to assume that if anybody's got good data, he's got the data, to be fair. So I think that helped markets in that, well, we're getting interest rate cuts and the economy's not bad. And by definition, therefore, isn't that the soft landing that we've all wanted? So because we were, a couple of weeks ago, we were worried about the hard landing and US yields were plummeting. So that has changed a little bit. Anyway, we'll talk about Asia, but I do think that has helped Asia. Anytime you get a big global rate like that coming down, it's going to help stimulate global demand, and obviously Asia is a big export-oriented economy as a whole. The Nikkei is fine. There's no panic there. The Bank of Japan was on hold, so that was the other key risk event from last week, which we managed to navigate our way around it. How good is India at the moment? I had a research report. I just haven't had a chance to write it up, but I might do that. There was one last week about how India is taking over from China. That would be very interesting indeed. But you can see certainly when we look at that chart and that chart together, because there's India and then there is China, it certainly makes a lot of sense when you're looking at these particular charts. A little bit of a rally there in China, so not the usual red flag, no pun intended, that we normally have from that country for our calculations here. Aussie market, I can't see any reason why you wouldn't be full risk position, because we have been making record highs. I think we made 5 of them in a row there until today's pullback. Not a great candle, and to be fair, a lot of the stuff that has been in my list, it got hit pretty hard today. Some of the best trends got hit hard today, and that's disappointing. No doubt we'll talk about them when we start doing your request, because you're going to go, Carl, this was a great trend, but today's candle is lousy. What do I do about it? And we'll get into it. And today's candle there is pretty lousy too. What do we do about it? Well, we can't do anything as trend followers, and I know that sucks. I know if you're following trends, you should be doing pretty well right now, I hope. And there's always that nervous feeling like, oh gosh, I don't want to give back too much of my profits up here. And you bit jitter and you start to get out of stuff that you probably shouldn't. Case by case basis on the stocks, but we have to trust this at this stage, and that is the lot of a trend follower. Unfortunately, there's nothing in there that tells me that we need to do anything but be full risk position here, and I totally accept that tomorrow could be the biggest black candle in the history of mankind, but we can't see that one coming. All we can see is what we can see. I won't do the I won't do the sectors today. I don't think they've changed a whole lot from last time, and therefore why don't we head over to the trading view screen and have a look at some of the key macroeconomic data points we like to watch here. We do have the Shanghai Composite there. We won't repeat that because we have said that it is bouncing, but it's worth also looking at the property sector there, which is the main driver of the problems they're having, and they did rally also. Actually pretty decent candles coming in there. Obviously still a major downtrend, but no red flags from that. US banking indices, they love some interest rate cuts, so they're going pretty well. Bringing it back to the bond market, and I'm looking for the US 2s. Look, they've got no choice but to go down, because in their statement of economic projections, the SEP that the Fed put out with that last meeting, they did say they expect US rates to be at 4.4% at the end of this year, 2024, and then 3.4%, if I'm not mistaken. If I am mistaken, type it in. But I'm pretty sure it was 3.4% by the end of next year. And, that's sort of 15 months, and this is a 2-year bond, and it should be roughly, give or take, very roughly, where the Fed rate is going to be in 2 years, or kind of an average, a little bit thereof. So this is why I think now with that Fed guidance that this is actually quite subdued, because otherwise, with the talk about very strong US economy, there probably was reason for this to undo some of this fall through here, but some of that was carry trade as well. The bottom line is I don't think there's anything too sinister here. I have said to you in the past that if this is going down, that could be problematic because it's markets factoring in recession. I think it's now more markets just getting more comfortable with the Fed is going to be. Okay, so let's not take that as a red flag just yet. And I did mention last week there could be another inflection point where lower rates starts to be good again. As weird as that sounds. Let's go to the Aussies and see what's happening there. Obviously, our RBA isn't going to cut rates anytime soon. If you think that, you are absolutely kidding yourself. They will not. The earliest they'll cut is May next year. I'm pretty sure I checked already, because that's when they'll get the March quarter CPI. So that is the first live meeting, in my opinion, where you could get a rate cut. They're ahead of the curve of rate cuts anyway, because they were about 100 basis points below all the other central banks. So don't think there's anything happening there. And that should help the Aussie dollar. And this is the last thing I think we need to look at, isn't it? Because I think the Aussie dollar's got a little bit of yes, a little bit of a head of steam behind it. Look at that. That actually looks like a really nice turnaround play, actually, the old Aussie dollar. So if you're going on holidays soon, you might want to hold off on changing your money over. We might as well look at some of these. Silver, I still think looks okay. I'd like to see it get on with it, because I think the longer it doesn't get on with it, the hot money starts to fade out, if you get what I mean. Otherwise, gold is a slow burn. I think that's a very strong chart, and I've no issues with maintaining a long bias towards that. Last week, you might have read some of my articles indicating that I felt copper was warming up. I mean, that's how far I went, sort of warming up, and I still think it's warming up, but again, it needs to fire up. It needs to get hot pretty quickly, or that could just roll over again. So we want to see close about 439.1 on that one. Iron ore is doing the dance, and it hasn't collapsed, but it's certainly not anywhere near this seasonal rally that I am waiting for. So that's disturbing. What happens if the rally doesn't come? And that a lot of people positioning for that rally, they're going to be caught on the wrong side. There was apparently some bullish news on uranium last night. I didn't read it because it's a public holiday over here in WA, and I had no interest in the markets today. But it didn't hurt. No, that's the wrong word. It didn't help the uranium price. Crude oil, looking at some of these energy contracts here, neither here nor there. I don't think you need to spend a lot of time looking at those. And the coal contracts also are pretty lousy at the moment. That is, you whip around the grounds. Let's get to your request, but we're going to do offline requests first. I'm going to head back to the Amy Broker screen, and we're going to look at, from David and Linda, OCL, which is one that has been in the list a couple of times over the last few weeks. I feel that this is the candle here where I first put it in, and I feel that this candle here is where I looked at it, thought about putting it in, but then decided I didn't like these shadows and that peak there. And then on that candle, I think I regretted not putting it in on that candle. But nonetheless, it has continued to move a little bit higher since then, until today's candle is one of those ones that I would have said on Friday's candle just looked amazing. I'm pretty sure I featured it on that basis. Then today you had this, but it's an extremely illiquid company, so it doesn't take a lot to create that black candle. So I'm not going to stress out too much about it yet. There was no volume influx to say that, well, okay, a bunch of people with a bunch of supply, all of a sudden hit a bunch of people with a bunch of demand, and that means demand is probably exhausted, and that supply showing is probably going to keep a bunch of people out of the market now, or entice a bit more supply into the market. There is a bit of a point of supply up here, which is worth keeping an eye on. Was that the culprit? Did that cause it to, probably got a little peak there. I don't think you need to go all the way down there. I think that's overdoing it. But certainly something around the top of that black candle. Let's go. And let's just extend that across. Look, we were close to it. Was that the cause of it today? I wouldn't have a clue. I'd have to go out and literally interview everybody who's owning this stock and say, hey, was it that November peak in 2023? Did that make you sell today? Oh, actually, Carl, yeah, it did. That's exactly what I was looking like. Come on. It is a signal. It's a signal not far from a potential supply zone, but I'm just going to give it the benefit of the doubt. It's not a good candle. It's not a good look, but let's put it down to illiquidity. But also, I think we would want to be pretty ruthless about it if we didn't get a pretty quick sort of bounce back. And this is a really good case study here, because the price action wasn't all that different. You get that black candle. It didn't do a whole lot. That looked good. And then the key is here. These shadows, they're the big problem. So, watching out for that sort of stuff here. It's just not there yet. I'm not going to speculate on what's going to happen, so let's keep moving. I think I've given you enough on that. I'm a happy holder at this stage, but I'm alert, not yet alarmed. Let's go to David and Linda's second one, which is Medicus. It's a much better picture here. What do we say? I just can't even decipher what's happening down there. Give it a bit more room, perhaps. Don't know what that means. Look, probably at a zero risk position all the way down here, and then cursing in my name. At most, you might have had 1/3 left, because often we'll say, look, keeping a third if it's a stock you really have an affinity with, because it's still above the long-term uptrend movement, whatever you were. I'm pretty sure I started running it again around about here as adding risk, and I reckon I probably ran it there, and that's it. Today, it's pretty close. I'm happy to back the pedigree on it, David and Linda, and say that, look, just based upon pedigree, FRP, if you've got it, full risk position. If you don't, happy to go a third. I can't see why not. It's like one of those classic US stocks, isn't it, that just keep edging higher. So, yeah, I'm going to go full risk position or plus 1/3 or both. Let's go to Peter M, who has FND. Good, I'm glad. I think last time we looked at this one, Peter, we were a bit concerned about it. Look at this one. Last time we looked at it here, we were full risk position before it tanked. That's not good. But I do feel we looked at it here. I just don't have the scratchings because I might have been in the other chart. But the good news is it's coming back. It's come back pretty well. We are seeing, let me just move that down a little bit. I don't want to remove it, but I want to move it because I want to show you this is a potential problem. How big should that be? Oh, look, even down to that candle, down to that peak there. Let's go to that peak there. And then let's go across and extend that. And look, today's upper shadow is the supply from that old peak manifesting itself in the market as excess supply because demand just couldn't keep up with it. As much as demand really powered into that supply zone, and at the start of the day, you probably go, oh, actually, we're looking pretty good here. I think we'll get through this. Why was this area an issue to start off with? You know, that plus 1/3 there really is only adding back the minus 1/3 from the $5, to be fair, isn't it? So it is what it is. But I do believe $5 caused the initial pullback, which then built on itself, which then probably got caught up in the that route we had late July, early August. It's going to take a little bit of time. We have to pay a little bit of respect to that level. Today really is kind of the first test of it, and we're going to need a dink, aren't we? So before we're adding any risk to this, any sort of little supply side showing there, a little lower high, lower low, very moderate, very modest supply candle, followed by a strong demand candle, and then it's off to the races. We have tested, we have respected, we have removed a great deal of that supply. And imagine if you were to have a tank. I know there's lots of things in the world going on where tanks are, so I don't want to make light of it, but just I'm trying to find an analogy. You have a tank and your goal is to get through a particular brick wall, and you hit the brick wall and you weaken it on the first go, and then you go back and it's easier to get through the brick wall. That's probably what we're seeing here, where we hit the supply once, it weakens that supply, it takes that supply to the market, because that supply is literally people holding shares that want to get cash. The demand, the white candles, are people who are holding cash who are buying shares. So we interact, we give some of those people with shares, we give them their cash, they are now gone. They are holding cash. Guess what? They're actually part of latent demand now, okay? So if this pushes through, many of them will realise their mistake selling too early, or selling because it got back to where they didn't get out last time, and they can become part of demand. And that's how breakouts work ultimately. So I'm pretty happy with that. I'm still full risk position, no reason to sell a third, but not buying any until we see the dink. Let's go to, well, that's it. Offline requests for Australia. There's only a few there. Go to Sanjay. Sanjay saying, good evening all. Good evening, Sanjay. Thank you for saying hello. Very polite of you. Adonis saying, hi, Carl. Thoughts on silver, which we kind of did. I still like it. Well, let's go back very quickly. The risk is here I forget to change screens and get myself into trouble. Look, we've got the push off the long-term uptrend ribbon. It's holding. It's offering dynamic demand. Short-term trend ribbon has turned up. Some strong candles coming out of this last push. A little bit problematic with some of those upper shadows. Huge supply zone up here at Adonis. Massive supply zone. It's still having an impact on the market. It's not clean. It's not clear. It's not a slow burn like gold. There's still plenty of work to do. Look, obviously we're more biased to the long side, but I still think there's plenty of work to do. So there's your recap of silver. We'll go back here and we'll look at your next part of the message, which actually has got nothing to do with silver stocks, which some of them have been coming up, so we might do that. Andean silver has been coming up a few times. I still think that looks fine. Obviously not great candles at the end, but still very much intact. That mithril silver, MTH, we talked about that one. Wow, look at that one. And SS1, oof, that's not a good candle. I haven't seen that for a couple of days. It hasn't come up in the scans for obvious reasons. That's a little bit disturbing. Yeah, probably managing some risk on that one. And I'm trying to think of the other ones, but I can't. ADT, nothing doing there. We did talk about that last week, and there you go. I needed to see the push above the long-term downtrend ribbon, test and hold, rally, high close, nice white candle. It hasn't happened. So ditto from last week. Needs more cooking. So a little bit of a tour to silver there for you Adonis. Let's do the other ones you have asked about though, which is Cat. There's nothing to do here. It really looks fantastic. Look at those FRPs on the screen. I better copy and paste here. Still FRP. I don't think I'm adding risk on the basis that last candle's got a little bit of another show. The one before it does as well. It's just not urgent at this stage, but still looks very strong. Happy holder there, Adonis, and his other two are in the US, so we'll get to those in a little while. Francine saying, hi Carl, thank you for your explanation on candles. With rising candles, is it better to have high volume? What do you think of Westpac and NST? Thank you. It depends, Francine. So let's go to Westpac. We might get some examples here. Well, this is a good example for when you don't want high volume. So typically we want high volume when we are bashing into a key point of supply or when we are starting a new trend, okay? Because it's all about supply removal, okay? That's when you want to see the volume. Remember, I just kind of explained it actually, isn't it? That supply is people with shares, demand is cash, we need to get rid of them. The only way to get rid of them is to trade with them, and that means volume, okay? Buying, selling, boom, volume. So when we are hitting a big point of supply, yes, we want to see the volume, we want to see that supply removal. You hear me talk about that a lot. When we're starting a new trend, like a turnaround play, we want to see supply removal because there's been supply weighing on the market for a long period of time. That's why it's been in a downtrend, okay? We want to eliminate that supply, and that's going to help us really get this new uptrend off to a great start. This is the other time when volume becomes important. Volume's not always important for me. It's important at times and in certain places, or at certain price action points. This is the time you don't want to see big volume. And you might say, oh, actually, there's big volume here on this day. Okay, but that was an options expiry day. Correct me if I'm wrong. So that one actually doesn't count. Take that one out of it. It's generally average, slightly below average, depending on the day. There's a few days above average, but there's nothing. Look, there's nothing like this. There's nothing really sort of hot here. Okay, and you can actually see when we do sort of have some heat in the volume and some volatility, it can cause the trends to pause for a while. If it's really hot, there you go. If it's really hot, it can cause the trends to reverse a little bit. Okay, so we actually don't want to see volume. Think about why that's the case. I'll ask you to think about why that's the case. Why is a big influx of volume in a beautiful, steady, low volatility trend like this? Why is that the worst thing we can see? If you get this about volume and price action, you really are starting to understand how my methodology works. Okay, I'm going to wait for some answers on that. If I don't get answers tonight, it'll be homework, and I'll wait till next week. But I want you to think about it. Let's do Westpac. There's nothing here. There's absolutely nothing sinister in this that I'm concerned about at all. It's just trundling along. There's so little downside volatility, and if we put the pieces together of price action, volume, volatility is the other tent peg of my model, where we don't want to see big volatility in a low volatility trend. Or certainly not. That's not fair. We are happy to see upside volatility. We're not happy to see downside volatility. So very low downside volatility is the key to this picture. And they're all just pictures. It's your job to kind of, it could be very simple and not understand why the pictures are the pictures, and that'll work too. Or you can hang out with me on Monday nights and kind of start to understand, I can't get why that picture happens. I like understanding it. FRP, in fact, look, I could even go so far as plus 1/3. There's no reason why you couldn't if you wanted to add some Westpac to your portfolio. Perfectly fine. Now let's go to NST. I think this one's a little bit better than, I was going to say better than not sure. I think that, not sure about adding the third, where Westpac was, a little bit, okay, the candle wasn't ideal. I didn't see the candle today, so I'm a little bit, I guess, behind the curve because I didn't look at markets today. So I was basing that comment on Northern Star's Friday's candle, which was wonderful, and that's why I ran it as a feature today. I didn't see today's candle, unfortunately, and that's kind of just holding me back from going the plus 1/3 today. So I thought I was on a roll there. I thought I was going to go FRP plus 1/3. I'll go FRP. Okay, full risk position. There's nothing in that chart which is telling me that the demand side control, which is so evident on that chart, cannot continue. Double greens, high peaks and high troughs. We've got gap ups, and after that gap up, very little downside volatility. That's magic. Very happy with that one. Still waiting for your... okay, Brett's got an answer there saying starting to hit sell supply. So when we're in that low volatility uptrend, that influx of volume, remember, it's also lots of buying though, Brett. Did you think about that? Yes, some people are starting to hit the sell button, but also there's been a lot of volume, there's been a lot of demand as well. So what does that mean? What does that mean when we're in that trend? And typically when you have a volatility event as well, like a big upward pointing shadow, okay? We might find one here. So look at this here and look at this candle here, blend those together, okay? And then let's see, I'm hoping we get some volume and if we've got the volatility. We didn't get any volume on it, unfortunately, which is very annoying for me. Oh no, we did. Yeah, there you go. So there is clearly, above average volume, and that's why I've got the average volume here. This is the 63 period simple moving average over my volume indicator to tell me very quickly visually what's above average, what's below average. Okay, and if we're going sort of 2 times, 2.5, 3 times average, it's starting to be significant. I have at times literally worked out how many standard deviations from the mean, but that is a little bit problematic sometimes as well. Anyway. But conceptually think about that. You want to see an outlier here in terms of volume. We're seeing outliers in terms of volatility, and it's after a long trend up. Okay, so yes, there's lots of supply, but there's also lots of demand. So what has been causing this trend, this uptrend? Well, lots of excess demand. And often when you see that upper shadow, because it's a big extension, remember high volatility. High volatility means big candle. You're seeing that demand gets sucked in. That final push of demand, anybody who hasn't bought is desperate now to buy. You've all had that feeling. In they go. And if you're a seller, if you're a big seller, the best time for you to sell is when everybody's buying. That's how you get the best price, and that's how you get a head start on your order. Okay, because these big funds, they don't sell all at once. They can't. They're too big for the market. So, but if they see that demand coming in, they know this is a place they want to get out. They will hit it hard. They will hit it hard, and that's where you've got the big supply. So the big demand meets the big supply, volatility, volume, price action all comes together to give you a peak there. Westpac's clearly not doing that right now, and you can see that's a great case study there on Northern Star. That's going to take a bit. I shouldn't assume, but I was going to say that's going to take a bit of time, I think, for it to sink in everything I just said. So be sure to go watch the replay. Click on that, go back, listen to it a few times. Hopefully it starts to make sense. I think I said it in a way that makes sense. Now it's up to you to make sense of it. But yes, we did get some answers there. Jenny correctly saying after Brett came in with volume needs both buyers and sellers, and that's the key. She says high volume would mean lots of sellers as well as buyers, but now we understand what the significance of those buyers is. Okay. It's fascinating for me anyway, and it's taken me many years of literally lying in bed awake at night thinking about these things. What does that mean? What does that occur? Tomorrow morning I'm going to go look at some charts and see if I can confirm that. So you're getting maybe the benefit of a few decades of sleepless nights thinking about these things here. Let us keep going, and we're going to go to Avant. Avant's got EIQ, which Echoiq, that's been on the list a few times. Oh, disappointing today. As I said, a few of those really nice trends copped some bad candles today. You can see very little volume today, so very little demand in the system. There was a public holiday over here in WA. Not saying we are the centre of the universe, but you can get small but motivated sellers. Like they're just selling. They don't care so much what the price is. And there's just no demand because maybe WA is on hold. Look, I don't know. I think we're school holidays elsewhere, aren't we, as well? That's why there's not a lot of volume, but we did get a nasty black candle. I think with those two candles together, I think you are just managing some risk here. And all we're talking about is minus a third. We're not talking about any more than that. So it's just respecting those two and saying, look, I'm going to take a little bit of risk off the table. Everything else is still fine. Okay, don't panic. Short-term uptrend, long-term uptrend. Otherwise, the price action was good, and it could be just a little bit of a delayed response to this. Okay, because guess where that occurred? Like, we shouldn't be surprised when we see these things. And maybe there's a little bit of okay, there you go. I was going to say maybe there's a little bit of something else somewhere else that's just causing that latent supply in the system, and demand is also seeing that supply, and they're just backing off now. They're just going, well, okay, let me see how we go here. We're going to get a dink. Let me see how we go. If it's a shallow pullback, another couple of white candles, there's still plenty of fuel in the tank here to get through and keep going. So, look, I think minus 1/3, but again, I think that's being really a little bit nervous, bit of a nervous Nelly, but I cannot go past these two candles in a row. But that's it. We're still plus 2/3 here, and I know it's frustrating, but we should again not put all our eggs in one basket. We should have lots of things going at this point in time. Small trades over lots of great setups means that nothing really bothers us too much. Okay, if we've got 4 trades, 4 setups, and they all go wrong, that's not good for us. It's not good for our state of mind. Forget our financial situation. But if we've got 20 odd trades going, you're bound to have a bunch of good ones in there that are making up for these, and you're still pretty positive about how things are going. So it's really important to have that diversification. I'm going to go minus 1/3 on that one. Otherwise, if you do feel it's a little bit nervous, then hang in there. But it's not wholesale disaster at this stage. You can see all of that demand hitting all that supply up there, can't you? Really. And you can see why that supply's come out because of those levels. Let's look at Droneshield. This is one we looked at a couple of weeks ago, and I said 1/3. And because so many of you came up with it, I kind of said, oh gosh, we're in trouble. Because when we all agree on something, it probably won't happen. And that was that candle there. So it hasn't done a whole lot since. It's been pretty awful. And I reckon that candle doesn't require any action. I think this candle requires some action because it's showing you supply is being reinforced. Okay, not demand being reinforced, but supply is being reinforced. So I think that tentative 1/3 that we had adding risk back in, which is the first time after I told you on that day there that we are all out, that I think that 1/3's probably come out there. And if it hasn't come out there, or if you maybe going halvesies out or thirdsies out, then certainly that is a big problem, and then that one requires another action there. And therefore, I'm at a zero risk position at this stage. I can't see any reason to be long. Not to say that tomorrow can't be the day that puts you back into it, but I just think that this one is probably more of a sideways proposition at best for a while now. Okay, I think this was the big chance to recoup some of this, and then no, there was just too much supply in the system, too many motivated sellers really looking at any bouts to get out, and the fact they hit it after that candle there is disturbing really as well. And then obviously today's candle is disturbing too. So for me, I have to say, well, it's one of those that didn't work out, unfortunately. And FRP, there goes ZRP. Yep. Sorry for that. I will show better news. Let's go to Sudesh, who's got JHX, which is starting to look good again. And like I said today, a bunch of great trends took a bit of a hit there, which is a little bit concerning when that happens. But we, as I said at the start of this, going to give it the benefit of the doubt. Not a great candle. $60 isn't an issue. It's been there many times before. Is it something to do with this supply up here? Look, possibly. I don't think it's all that significant. Certainly there. I mean, if you wanted to draw it here, I think you're being pedantic. I think that's probably more where, yes, this is a peak, but I think you can go overboard. That's probably where the supply is. Even if you did bring it down to here, I don't want to curve fit. It's still not really today, is it? It's still not there. But yes, there is supply, and this is the risk you take when you take. This is a turnaround play. It's not Westpac. Okay, so you got by their very nature, they are a step up in risk to go from a continuation to a turnaround, and then you go a step up in risk again from turnaround to aggressive. Okay, and that's why when we get to aggressive trades, we're actually putting less risk in, taking that extra precaution. I'm still a holder here. I don't think you need to do anything. I think today is just a bit of a weird day, And sometimes these things can right themselves. If they don't, then you're going to have to, potentially take some steps tomorrow, depending on how bad that candle is. But I'm going to go FRP today. That's my opinion. Let's go to Joanne, who's asking about CXL, which actually looks really interesting. And I think this is potentially an aggressive setup here. Why would you? Why would you want to? Why would you want to do this to yourself, Joanne? Do you really want to do this? All right, let's do this. It has the hallmarks of a aggressive trade because it does have this basing. It has this basing pattern here. Very, very sideways. Then it starts to throw in white candles. I wouldn't say there was sort of any huge volume confirmation here to say that last bastion of supply, like the last holder's given up. I can't see that. But today's candle is very impressive. It creates a trough that's higher, obviously, than the last trough. In fact, it creates a trough here that is actually higher than its second from last peak. Excuse me, using the cough button. I think this is fascinating, and I get very tempted on these because it's the punter in me. But this is how I basically hold myself back and limit the damage I do to myself, because I like to punt these. It's just some skin in the game, and I'm respecting everything else that's going on here, which is obviously this. But we can do it because we have this. We have all the other stuff we've talked about, and we actually got a little bit of room before we hit that dynamic resistance, which let's face it, ladies and gentlemen. And this is why I do less risk, because you want to, Joanne, you want to muck around with this thing? Are you serious? But eventually the trend can change. It can change. So look, I think it's a bit of a contentious one, but I'm going to go plus 1/6. FRP if you've got it. You shouldn't have it, but if you do have it. Let's go to your next one. Where are you, Joanne? You're up there. Okay, let me highlight you so I don't lose you. CYL. Okay, you couldn't get two more different setups, could you? I did put this in as in my broader shortlist today, so therefore it is a plus 1/3 by default. Okay, so here, and here. I didn't put it in the shortlist only because it had a tiny little shadow. I'm being a little bit pedantic, and that really was it. Because I had a bunch of other ones, 14 of them, that really closed pretty much on their high. But yeah, look, this was the one that if there was going to be a 15th on that list, it would have been this one. Or EZZ was very close as well, if it was going to be 16. This one I just kept it out just because I didn't like that big black candle. Didn't like that big black candle. There's just, I've said this in the past, like whatever damage is done, I like to see the same amount on the good side as well, So maybe this is just a little bit behind that equation, whereas CYL, on the other hand, I think has just gotten itself ahead of it. But those two are very, very close for making a feature, which is my personal highest conviction. They're the ones I would put my own money on. But very happy here. FRP plus 1/3 on that one. Very different setups, but both very interesting. They both deserve, and this is what we're talking about ultimately, both deserve to have some risk on them. And Michael, well done. Perfect. Next one is EZZ. Great. Don't have to talk about it now. I think it's very good. I'm definitely... what do we do here? We did do a minus 1/3 for a round number. I don't know. There's no way we would have done 2/3. I don't know what that's there for. Plus 2/3. We still have plus 2/3. We've still got 2/3 left. Let me put that down there. So that's where we were. I don't think these are so awful. Nothing close beneath a trough. So that's, I think, they're disturbing, but not enough to do anything about it. And then there's nothing else has actually happened since then. So, yes, FRP plus 1/3 on that one. As I said, it was very, very close. And now I'm looking at it, I'm wishing I actually put those two in. Sometimes you just kind of need to talk about it out loud to convince yourself. FND, which we actually have done. We spent a lot of time talking about that one before, Michael, but I know you type in after we talk about them. Nicola's saying, hi, Carl, can you have a look at HLS, which is another very interesting turnaround play, which we have done a little bit of analysis on in the past. And all those arrows, okay, are explaining historically what an aggressive setup is. And the most important, we actually put a little 1/6 here, didn't we? See all the way back, there you go. It's very relevant tonight, plus 1/6 all the way back there. And this is the most important arrow. Let me just move him around because that's the one pointing to that big white candle, which really sets this up now as a long trade for me. Okay, so it's a turnaround setup. I like the fact that the long-term trend ribbon is actually offering dynamic demand. I like this candle. I put this in tonight. It's in the shortlist. It didn't get the highest conviction list because there's a bit more risk involved here. But actually quite a bit of supply removal, and this we talked about when you want to see it. You want to see it in these uncertain little setups where there is supply in the market. It's been pesky, it's been there for a long time, but we need to get rid of them. So there was a huge amount of demand today, but there's a huge amount of supply. That supply's coming out of the market. Looks, demand is coming into the market too. But who's winning the war overall? And I think the demand side is. So I'm FRP, obviously, and then actually plus 1/3, but what did actually don't make the list. So we're getting some really, really neat little setups tonight, actually. I'm really happy about where we're going with this evening's stocks. And RDN, actually, that's another really good little case study. I'm pretty sure I put it in on this day here, so maybe you might have bought it on that day. You're looking very fine. It definitely made the shortlist. It didn't make the shortlist because it's now getting to the point. We're over that balance point where this starts to just play on my mind a little bit. Okay, so I didn't put it on the highest conviction list. So it might push, that's the wrong word. It might prevent some people tonight looking at it going, okay, well, I'll add a third. And it might be just more of a, if you're on it, then just hanging on to it. So that's up to you, but technically, I can't fault it otherwise. That's an issue, but it's up to you. So technically, the candle is strong enough for me to say this, but you decide whether you want to add the risk on that one. But I think that's well, and you got all the 3 out of 3. Nicola's got a bit of a shot for the turnaround setups here, I reckon. Yes, that's another one. This one's a bit of a slow burn. I'm a little bit baffled as to why it actually hasn't pushed off yet. I would have liked to have pushed off by now, but it keeps creating these white candles. And I know you're watching this, Nicola. I know you're looking at that this trend ribbon means something different, so different to you now today than it did maybe 6 months ago. And you just know it's just part of your DNA. We just go, look, this bloody thing works, and I've got to keep an eye on this thing. And that's the way I look at this. So yes, it actually made the shortlist today. It didn't get on the shortlist FRP plus 1/3. There you go. But we want to have a mix of setups. So don't have all turnaround setups. Certainly don't have all aggressive setups. But at the same time, don't have all continuation setups too. You want to have a mix of setups because they do move in different ways depending what the broader market is doing. That's what you'll find. Let's go to Perry, who's got a couple of ASX stocks, which is REG. We talked about that one as perfect trade. Perfect Perry has found the perfect trade again. So yes, on that one. And TCG, there you go. Great minds, being my mind and your mind, Perry, are thinking alike because they were in my high conviction list today. Brett's got APX, which certainly made the... actually, no, this was in the high conviction list, I'm pretty sure, tonight. Was it? I can't remember. I think it was. I'm going to tell you here. Oh, I didn't put in. Why didn't I put it in? Was it just that upper shadow? The upper shadow there? And just this little thing over here. It's just, and it could be just enough. Otherwise, yeah, look, it's up there with EZZ. It's up there with the other one I didn't put in, CYL. Yeah, and great. I'm glad you brought this up because it was last week we actually looked at this candle, and I can't remember why I said minus 1/3, but I did. I can't honestly, because I'm looking at it now and going, it's probably not enough for a minus 1/3. Why did I say it? I'll have to go check the tape. But I did remember it was on the other. It was in this chart, in this screen here. You can see where I'm waving, and I had to delete it because I need to make charts for it. But it's a good, it's a good example of how the model works. I saw something in it last week. Remember, it's a common sense system, not a black box system. So I saw something. I'm fallible. It's discretion. I said, I don't like it. For whatever reason, I didn't like it. I'm going minus 1/3. But that, and I was very, very clear in saying, look, that's the order of magnitude of what we're talking about, minus 1/3. And it still means plus 2/3. And I think this is one of the things that really saves my ass many times in my trading, is this notion that if I see something I don't like, I only get out 1/3, okay? If I see another signal I don't like, that's where I'm getting out some more, but it's never all in, never all out. And if you've got the plus 2/3, I think you're pretty happy you hold on to that today. It looks very good. Certainly FRP, maybe just holding back on the plus 1/3. I'll leave that up to you. I'll write it in because it's close well enough, I think, to warrant it. Fascinating. Appen. What the hell is going on with Appen? You know, if you know the history of Appen, you almost couldn't believe that it's possible for it to be this good again, but hey, it is. And I do feel that at some stage, though, it's going to come a cropper at something like that. Okay, it'll get to one of those and it won't get past, but I should stop talking now because that is prognostication, and I don't do prognostications. But sometimes gut feel does tell me things, right or wrong. Let's go to BC8, which I think is still looking pretty good. As I say, I haven't seen, it's still looking fine. I thought this was going to get going a little bit more than it has. It's very sideways. Just be careful with it. What we don't want to see on stuff that looks promising and then doesn't go, they can just be lousy for a long time because you won't be the only one that's holding onto the bag there. Worry about that. If it happens, you know what to do. It's not happening yet, so I'm happy to hold at this stage, but it's not doing what I would have thought it would have done by now, and that sometimes is a bit of an issue. We have talked about this one already. That was FRP not adding a third just because we don't have the right candles for it at the end there. Then we started our discussion on volume and price actions. We had answers here from Brett, Jenny and Roscoe saying, dare I ask, A4N, yes, it's not pedigree, but still keen. Yes, we did that one right at the start. Roscoe might have turned up a little late. It was one of the first ones. I think it was the first one we talked about today, and we said that made my list. So we're going to go FRP plus 1/3. It was in my high conviction list today. Perry's got some US stocks. We'll do those literally in just a second. Don't type any new ones in. I'm not going to do them anyway because we want to end them soon. CLX got the code wrong. I just gave you the go-ahead on CXL. CLX. I think you should have just cut your losses there, Joanne, and just stuck with CXL and patted yourself on the back and gone, oh, I found a really nice aggressive setup for Carl today. I don't like this one. It's a bit of liquid. The price action's not what I would like. It's got lower peaks and lower troughs at the end there. It is bouncing off the long-term uptrend ribbon, but it's very sketchy. So you can see there's hardly any volume here. This is 500,000 shares on a $1.70 stock. And that is a problem here. This is not the sort of one I tend to gravitate towards unless the technicals are perfection, and they're not quite there at this stage. They're not awful, don't get me wrong. Long-term uptrend, short-term uptrend is waning. Candles are mixed. So there's just not enough boxes for me to check to say I want to have any risk on this at this stage. So for me personally, I'd be zero risk position. If it's you, I'd say you're allowed to hold, or you're allowed to do whatever you want, because it's your decision with your money. But from purely following my technical system, you'd be allowed to hold until it kind of closes beneath that trough again, and then I think we're in a bit of trouble. Isn't that funny? Should I see? Oh, wait a second. I should have read your. I thought I did CXL for you anyway. Hold on, let me have a look at your original one. You can all read Joanne's message down the bottom there. I might have got off on the wrong. CXL, yeah, you put CXL the first time. So there was never a CLX. CXL was the correct one. Okay, you got it. It is it's laid over there. No worries. So I didn't need to talk about that one. All good. Last one for the Aussie stocks. FFM is still fine. So Roscoe falls into that category of great trends today, ended up getting some not so great candles. But actually that's probably one of the least worst candles I think you're going to find out of many of those today. Disappointing. Interesting. Like I said, I don't like to see really good trends all go bad at once. Bad is too strong a word. But there were some really lousy candles out there today. So look, I think that's fine. Full risk position. Not 1/3 though, but full risk position. Okay, let's go over to US shares, and we are going to head back up the list now, and we're going to kick off with offline requests. I might do the UK one first. Let's go to Peter M, who has PAF. I'm baffled. What is this one? Oh, he said LSE, Pan African Resources. Okay, got my interest. Looks very good. What resources are these guys mining? Because pretty much every Australian resource stock is in the toilet. So I wonder, somebody Google it for me. Tell me, what are these guys doing that is so good? Oh, it could be gold. Okay, gold. I bet you it's a gold stock. It looks fine, no complaints, nothing to concern ourselves with. Is this the best gold stock chart that we can find? It's not. Yeah, it's not. Not the worst is the wrong word. It's good. It just could be better. The thing that strikes me first is all these black candles. So it's almost going up begrudgingly. Price action recently has been good, but prior to that, it's been extremely overlapping, and we want cleaner price action. Is the leopard changing its spots? Good clean white candles here. Good clean price action. Yes, we've definitely got the double greens. Do leopards change their spots? I'm not so sure. Certainly a holder, and as far as a buyer adding a risk at my own money, I would definitely want to be sure that this is the best gold stock in the world to add my risk. But otherwise, no complaints, Peter. It's, if that's the one you like, that's the one you like. Let's head over to Pete's US one, which is VRT. Vertiv Holdings. I like this as a turnaround play. It's still got a long-term uptrend, but it's more of a turnaround in a continuation, if that makes sense. Yeah, no complaints from me. It's getting a little bit close to the major point of supply. So ideally, if you're going to have a crack at these, have a crack here with these two big white candles. Or after the dink, even better. I mean, look at that. That's just perfect, isn't it? Look at that little dink. Yeah, so no complaints. FRP plus 1/3, but just be mindful that you are going to have to bash your head up against the potential brick wall of the big point of supply that's not too far away from here. All right, let's do... David only had Aussie one, so we're going to head back to online requests. And I saw a couple there from Perry. Perry's got CW, Curtiss-Wright, if I'm not mistaken. There you go. Wonderful. All blue sky from here, no doubt. Let's go back and double check, but it is. Great candles. What was this all about here? Yeah, look, it came back really well. I can't complain. Price action since then has been very good. Double greens and an emphatic buy candle on Friday. So FRP plus 1/3 here also. Put that. That's not supposed to happen, but I think you get the picture. Let's do that and that and that and that, and go to Perry's second one, WAB, which is Westinghouse Air Brake Technologies. There you go. Some experience with this one in the past. Great. So there's just this great consolidation here, isn't it? Great base pattern, pushing out of that. No complaints. Look, 200s. We're sort of in the shadow of it, but I don't think that's an issue. Otherwise, it's just sheer perfection. So FRP plus. Oh, it's getting late for me as well, Joanne. Plus 1/3. There we go. And let's shift that up there and go save. I'll just have a quick look out the corner of my eye to make sure there's nothing, and that looks so cool. It looks even better on the weekly chart because look at how well it's held that short-term uptrend ribbon, and all happy with that one. Let's go to Perry's third one, which is PEG, which is not ringing a bell. That's REG, so we're stuck on that one. Public Service Enterprise Group. Okay, I think we did this last week, didn't we? Okay, well, there you go. We did do it last week because we said FRP plus 1/3, and Perry, you're absolutely correct in saying, well, if you're on a good thing, add to it. I mean, that's literally my motto. If you're on a good thing, add to it. So plus 1/3 there on that one. Let's go up the list to, there was a couple more here, I'm sure of it. And there wasn't. Oh, yep, here we go. There was Adonis. Adonis had, did you want Adonis? Did you want Caterpillar? Did you want Caterpillar instead of Catapult? Well, let's look at both. We might as well. Okay. So just in case Adonis wanted Caterpillar, then this looks very good. It actually looks like a little bit of a before picture to a couple of Perry's ones where we have this really great basing pattern forming here. We're just taking out the supply, taking out supply, taking out supply, and then we're setting up to go through it. Obviously, Friday's candle doesn't give us, great urgency just yet, but everything else is very, very sound. And I think this strong close on Thursday's candle into here is telling us we are doing that. Friday's is not a bad candle at all. It's still very much within the range, didn't close beneath the balance point of that strong Thursday candle. So it's all very, very good. And what I would say here is if you've got it, you are definitely FRP. There's no doubt about that. As for adding the risk, we're going to go next high close is the plus 1/3 there. Any candle closing on its high is adding some risk to that one. I think we are done enough at that big point of supply there to warrant or to suggest that supply is not a big issue anymore. Let me get rid of that one and then type in GE. Great. I know we've looked at this. I reckon it was probably here. You might have actually probably dusted it by then, but I think you're getting back into it. You're probably getting back into it on this candle, adding another third on this candle, and then on Friday I've really got no objections to adding a third on that candle. Could be your first third. It wouldn't matter. Let's do that. Do that. There we go. And the last one for tonight is VST. Vistra Corporation. Oh, looks great. Let me just double check. There's nothing we need to worry about out here at Donis, and there isn't, because it's, that's it. It's taken out that high, so that is not a problem. That's blue sky. I love the gap. I love the run. I love the high close. I love the fact it got through 100. I mean, this is probably to do with 100 here, and we're going through it the next time. If you find it hard to do these ones because it's gone up so much. How could I do it? Just put less on it, but I think have some skin in the game, because I think that is you can only get a candle like that if everybody wants to own it and nobody wants to sell it. You have to keep reminding yourself of that fact. It's not a hunch. It's fact. So that is it. If I have forgotten anything, just type it in down the bottom. I'll keep an eye on that space, but just to save some time. Nope, don't want to go here. Back to the office. Back to the office. We wanted to go back to here. And I'm just going to read you the disclaimer. But if I did miss something, type it in. We're going to say that everything we discussed tonight is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon that general stuff, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Otherwise, always remember that trading is risky. You could lose money. You're probably going to lose money at some stage. The losing isn't the problem. It's how you bounce back from it. It's how you try to minimise those losses and maximise those profits that matters. That's not in the disclaimer, but it should be. You're responsible for everything you do, not me. It's been a pleasure chatting with you this evening, ladies and gentlemen. Hopefully you enjoyed it. I certainly did, and we'll see you back here Monday night next week. All the best for your trading and investing. Until then, bye-bye for now.